If you're sitting on a 620 FICO score,
Yes.
And you've got 3.5% down,
Yep.
you're very, very realistically in line to be able to purchase a home. So I'm guessing if people found us here on this video,
If they're watching this ridiculous YouTube channel,
right, they probably either saw us eat tacos and somehow figured out what are these morons doing,
what do they actually do for a living?
Yeah. And or they watched the other video that we did about where we broke down kind of some of the closing costs, and we got into that video and we got really excited and started talking about all the amazing things that we do.
I'm gonna do a card right there. You mean this video?
Yeah, this one.
Right here?
Yeah, this one that we did.
One right there.
Over here. and we just got really deep into that video,
Yeah.
and just started kind of explaining some of the ways that we use those as leverage points, and we didn't want to make it too long, so I think we had to in order to do it justice, we wanted to talk a little bit more about loan types, and I think this is something that I enjoy talking about with you, because you even see them in a different, you see them in this like really kind of financial way, and I see them like what the consumer's dealing with, like second to second, and we just want to encourage everybody at the beginning of this video that the preconceived notions you probably have about the amount of money you need to spend, and if you haven't watched our video about breaking down closing costs, like go back and check that out. I can assure you it is probably less than you have been told by the majority of people in your world.
It's not as daunting.
No,
it's
not
only
even
a
close.
few things, and we kind of, especially if you've never bought a home before, it can be intimidating, especially if you don't really understand what it is that you're putting your money down for. But it's a lot more easier to stomach than I think most people would think.
It's just a lot more attainable, I think, too,
Sure.
right? Like I will tell you right now, like I mean, there's plenty of stats about where most Americans are at with their savings account, and I couldn't regurgitate, but it's not a lot of people have a whole lot of money sitting around, right? But in home ownership, I've found that the biggest barrier for most people in home ownership is that down payment portion that they think, that money that has to come out of their account immediately, and then it's just scary for them to recoup that. It's usually not credit score. There are plenty of people with credit issues, but we've got a million resources to help you fix that.
We just got off the phone with one of our lenders that can go down to 550 right now. Like, that's not universal, but I'm just saying credit is usually not the thing that's inhibiting you.
It's usually the cash on hand, and we understand that, and but with a little bit of work and obviously a little bit of education, most people realize really quickly that they're super close and or could be within 6 to 12 months. Yeah, and I understand 6 to 12 months seems like a long time. I'm a bit older. Years move faster for me now, but for the most part, 6 to 12 months is not that long when we're talking about being able to get you out of that whole circle of renting, which is an absolute waste of money, right? I don't care what anybody says, whether their initials start with GC or anybody else. Like, renting your own personal house doesn't make sense for most people. So I think it's we just want to make sure that people understand there's a way out of that if that's what you want to do.
So the 20% myth, let's just squash that right now. We'll start with conventional loans. Okay, so this is when we're talking loan products. We'll dive into a couple different loan products and types of loans and stuff. Conventional is the one you think of when you think of most about buying a house, right? The old sort of traditional, going conventional, putting 20% down, that's how I'm going to buy my home. So you can. Conventional loans are basically your straightforward, I'm buying a house, I've got good credit and a good W-2 job, or I'm self-employed, but I have a history of my tax returns or money or whatever. I'm going to go with a conventional loan, okay? That is anywhere from 20% down all the way down to, I've seen lenders do them as low as 3% down. And they're going to vary. Here's one of the things about the lending process is that whereas your other professionals during your transaction, real estate agents and stuff, they're kind of just licensed across the board. They're going to have different levels of expertise and service and stuff, but they all have the ability to provide the same thing. Mortgage lenders have different abilities to provide different things. So depending on who your lender is, they're going to have different loan products. You can put as low as 3% down. You can put 10% down. I would say most of the conventional loans that we see right now, and this is as of 2020, are 5% down.
Yep.
That's kind of that's almost become the standard in the sense that, like, I think almost as a society now, we view a conventional loan down payment more as 5% than we even do the way that other generations used to see it as 20%. You know what I mean? Like, that's more the mainstay thing now. So your straightforward conventional loan, I would bank on, if you are capable of putting that 5% down, your lender, for the most part, if you're in good shape, should be capable of approving you a 5% down.
Yeah, I would say all the lenders that we partner with, all offer solid loan products. We have solutions for people who are not ready, right? We've got there's there shouldn't be a barrier to you at least leaving that conversation without a game plan. And I think for most of us, and I will say this too, as somebody who at one point in their life had atrocious credit, right, and a million things going on, there is a sense of relief that comes with at least having a game plan and knowing that, like, if I start moving in this direction today, I can at least somewhere get to the end of this tunnel and start breaking free of some of this stuff. So look at it from that standpoint too. Even if you're not ready right now, put some real action to it, because there's just, like I said before, there's just not a scenario for most people where renting is the most financially responsible thing they should be doing with their money.
100%,
right?
Man. And you know, we'll move on to the other types of loans here as well. The one last final thought I want to say on conventional is that if you're somebody who wants to put more down, this is why it's really important to work with really good professionals, because ostensibly the argument for putting more down on your house is so you have less of a loan balance to pay interest on, right? Rather than putting 20% down, you may be able to put 5% down, and then you may be able to take that extra money that you're not putting down and maybe buy your rate down, you know, from a 5% to a 4% or a 4.5% to a 3% or something. And that's going to make your monthly payment lower. You're going to pay less interest over time. The long and short is that your lender should be able to go over those scenarios with you. So just going with a good, solid, usually private lender that really knows what they're doing is way better than usually just going with like your local, like whoever your big bank is, your Wells Fargo or Bank of America. I'm not saying anything about those banks as far as, I don't want to say anything negative about those banks. I'm a client of those banks as well. It's just not who I get a mortgage through, because they're kind of just becoming a number in a system. Getting a really good, solid lender, usually recommended by your real estate professional, is going to save you money in the long term, usually.
The reality is, by the time you're getting to the point where we're talking about lending, you have almost assuredly made a decision that this is the person you're going to entrust with the largest purchase you'll ever make in your life. Trust their opinion on other matters.
Yeah,
right? Like
they do it every day.
Yeah, exactly. So I mean, I would just stay in line with that.
Yeah.
I have a lot of fun with FHA loans.
Sure.
And I've done a bunch of them. I cut my teeth selling condos, right? And so, you know, condos in that price range to younger people who, so I dealt with a lot of FHA, so I learned so much about them. And I think it's such a great loan product for people. And it kind of brings two things together. If you've banged up your credit a little bit and your down payment is a little bit lower, you can, again, you are still able to get into a house, right? And I don't know, I want to say right now, we'll stick with 620. Right?
Sure.
If you're sitting around a 620 credit score,
to be safe, it's a moving goalpost, but that's
it is. And there are lenders sometimes who can do it a little bit less, and then some that require a little bit more. But I think if you're sitting on a 620 FICO score, and you've got 3.5% down, you're very, very realistically in line to be able to purchase a home.
Yeah, I mean, as long as you've been in the same, at least, industry for long enough or whatever, you're not hopping jobs all over the place, 2 years in the same industry, even if you're not at the same exact company, but if you're in the same industry and you can kind of verify that with your lender, there's not a whole lot of things outside of that are going to keep you from getting approved there.
You're talking about a $200,000 house would essentially cost you $7,000, right? There's going to be some incidentals. It's not $7,000 flat. Go back and watch our other video if you want to know some of the other costs that jump up. But that $7,000, I mean, if you just think about that, right, from a percentage standpoint, the amount of skin you have in a game to own something that is one of the largest wealth determiners anybody could possibly put in their wealth building portfolio, right, is real estate. And owning your own home is probably the first place to start, unless you're just going to go buy a bunch of investment properties right off the bat. That's not what this video is about, right? It's a really, really great loan product. Now, there's some things to look out for, right? If you're purchasing a condo, some condos don't qualify. You know, I made that mistake early in my career. You go and they love it, and then you talk to the lender, and lender's like, they can't buy the house. Like, why? Like, they can only go FHA.
It's not
right?
FHA approved.
And there's reasons why for that. And if you know, our contact information is somewhere on these videos, right? So if you want to reach out to us,
check the description.
Check the description. Look down there, right below me, right down there. There'll be something that's like, you know, and you just, and there's some different things in the inspection that come up that are required by FHA to be, but they're typically not things that kill a deal.
No.
If anything, you know, they give you a little bit of leverage. There's some things on the listing side that if you take an FHA loan, you need to be aware of. Right. That appraisal, if it comes in low, it's going to stick to your property for 6 months on the FHA side. Right. So there's some different rules along with it. But I will tell you, they're just not rules. They're not things that hinder a deal or hinder you from being able to purchase the property you want, especially when you're working with somebody who understands all of those things. And just you're not even seeing the wrong homes in the first place.
Yeah. Well, and I mean, some of those things can help you too, right? So, you know, the long and short is that an FHA is a government insured loan, right? And so they have some requirements on the things that they want to insure. They want it to be really cosmetically nice and stuff like that. So there's some things that you might not have even have asked for during your inspection period. That the appraiser might come out and require the sellers to do, such as, wood rot and things like that. So they're things that might not really even matter too much to you, but it is a nice little added bonus to be able to have your agent go, hey, you guys got to fix some of this stuff and make it look real nice for our buyer, and they just kind of have to do it, So it can kind of work in your favor as well.
It certainly can. And again, it's just like everything in real estate. What's your leverage position? How deep are you into the contract? Is it worth it for the seller to go back and get another offer? And again, those are just... Like I think Brian said at the beginning of this, every real estate agent is licensed to do the same thing. Yeah. Every real estate agent can't do the same thing.
We all got the same tools. We use them a little bit differently.
Yeah, exactly. So I think that's really cool. And and I like the government-backed loan type programs because I think, one, they speak to me a little bit because I worked with so many first-time home buyers to get my career going. Yep. And then VA is another great one that I kind of was able to start working almost by accident. I partnered with a lender who did a little bit more VA loans, and she kicked me a couple of referrals. And then I had some agent referral partners. I had a little string where I did 4 or 5 of them. And I probably do now a dozen VA loans every year. I've got two of the 6 I have in contract right now are VA loans, I think. So
really,
yeah, and they kind of come with some of the same stuff that the VA FHA loans come with.
Yep. As far as required repairs sometimes. And things like
some
that.
Required repairs and stuff. But the reason that loan product, one, it's an awesome thing for the people who have served the country and qualify as veterans to be able to use.
Yeah. So to clarify, it's going to be for military members.
It is. Yeah, military members and their families, and they're like I said, they're really great loan products. They typically come with much lower down payments, if not
if
no.
Any, you
if
can
any,
do a lot. I mean, you could do 0 a lot of times.
So many of them are 0, and it's going to depend a little bit on the benefit. And again, a good lender is going to be able to tell you exactly what's going on with that. But they're really, I think they're really great loan products, especially for like. I would say probably it was maybe the 10th guy who ever bought a house. He just sold that house and is buying new construction. But the day he got into that, he was just buying it for himself. His mother had just passed, right? Oh, okay. He spent no money to get into the home I will tell you the excitement that it comes because he would not have been in a position to purchase a home without using his VA loan. Right. Like it was he just hadn't put enough money away yet. Sure. But where his life was at, it made complete sense. And the excitement level and the amount of time he stayed in the home and how many times I talked to the guy, that was all those things are fun when people buy a new house, regardless of their loan product. But that guy that was the only way he was going to be able to do it, and he knew it, and he was so grateful to the people who got it done. It was pretty cool.
Yeah, when you're able to have those moments, there's a lot of ups and downs. I just tell you, emotionally in real estate, when you're able to have those moments when you really come through for people and they're really, really, they get something that they otherwise might not have had, it's pretty cool. So if you are, current, former military, that VA loan is out there for you. That's probably the best product for people that are of that of that designation.
Yeah, and it's here's the thing is it's one of those deals, and I'm not even really sure why it is this way, but when you're in a multiple offer situation, there's sometimes they're a little bit harder to get accepted because I think listing agents are uneducated, and it's really important. I think if you're searching for an agent and a lender, for them to have experience because they're not hard loan products to explain, and it's very easy to explain why the borrower is as powerful as any other borrower. Sure. People get a little bit afraid of the lender requirements on the VA side, and they're just not a problem. I mean, they're just never an issue. I've never had a deal fall apart over it. I've never had a deal fall apart over it. And it's just, again, there's just a lack of education around them. I think most agents just don't do enough of them to really understand. Yeah. But they're amazing loan products. I love them.
They 100% are. And so those are really going to be your 3 major types: your conventional, your FHA, and VA. There are a lot of there's some nuances to those. For example, on an FHA loan, you can actually do an FHA FHA renovation loan.
Yeah, I think it's a 203B, which is a regular
203B is normal. 203K is going to be basically your renovation loan. So if you're going FHA and you're saying, right out of the gate, your agent's like, this is not in shape, it's not going to be approved FHA because, like we said before, there's a lot of lender required stuff. You can shift that from a 203B to a 203K. Now you're actively taking out an FHA loan for a home that needs some repair. So they got you covered in a whole bunch of different ways, and that's without even diving into some of the down payment assistance programs that are available out there and stuff. That's just one of the cool things about the lending world is when you're on the financing side of things, there's just a lot of ways of getting things done. So we've covered a lot of the main kind of loan types. but reach out to us for the nuances,
Yep.
because there are a lot of, there's renovation loans, there's private equity, there's a lot of different ways you can get things done. Those are just the major types, but just don't let your lack of knowledge on the financing side be a hindrance. There's a lot of ways to get things done.
Yep. And I would say, especially to some of the peeps who maybe are looking to live in a more rural area, to USDA loans are amazing,
USDA
right?
loans, 0% down as well.
I mean, and depending on the area you're looking to
Depending on the
buy,
area,
we've got stuff like that around here. I mean, obviously not going to buy in Dallas proper with a USDA
Sure.
loan, but there's plenty of area outside
Yep.
outside of town where you can still get those too. So, like I said, our contact information is in the description. We love to talk about this kind of stuff. That's why we do these things. Go back and check out the video about the fixed costs on a deal. But if you have any questions about loan products, let us know. We'll connect you with somebody who knows even more than we do.
Ooh, that's almost impossible.
Very, very rare.
Thanks for hanging with us, guys. We'll see you in the next one.
Bye.